Really what I'm doing here is saying the bear arguments, because we've been sideways in the S&P 500 for 6 months, seem like they're getting louder, right? Everyone, gunlock, recession, and barons, everyone starts talking about it for a full day. So I feel like let's get an airing of what the case is and then try to assess whether there's any traction to it right now. I think it basically has three components, the bear case right now. First of all, the bond market. Everyone keeps kind of reading some scary stuff into the shape of the yield curve and the softening up of corporate bond prices. So that's, I think, probably exhibit A in the bear's case right now. Narrow leadership of the stock market is a common criticism. Everyone says it's only FANG, and obviously the greatest percentage of the total market cap gains has come from about 10 stocks this year. And then peak everything. I mean, you can have people say it's peak GDP growth momentum, it's peak profits, potentially peak profit margins, peak liquidity. So all these things are thrown into the mix, and people say, well, this probably means that a 9 or 10-year bull market maybe is on its last legs. I have answers for this because, honestly, I think the bulls still deserve the benefit of the doubt here. We've only traded above these levels for a handful of days in history, let's keep in mind. So therefore, the bulls get the benefit of the doubt. The bond signals are not urgent. Until the yield curve inverts, it really doesn't give you any signal whatsoever, and corporate bonds have held up okay. Finally, the 2-year note, when that yield is going up, that's actually a good signal. That's a good reason for the curve to flatten, because it's saying the Fed's going to keep tightening and the market can and the economy can handle it.
And you can also make the argument that the 10-year is being held back by other forces.
Right. You can explain away the long end relatively well. So that doesn't really tell you much. Finally, the rally's not that narrow. You have about 100 stocks in the S&P 500 up 15% this year. Just because the biggest ones have carried the weight, it doesn't necessarily mean it's only been a handful of stocks. So you could be past the peak of perfect kind of growth setup and still not necessarily have this bull market be over.
That was the question. I mean, we've said up to this point that the FANG stocks were carrying so much. When you have Netflix down over 12% today, what does that do?
This would be a good test, by the way, right? So you're not seeing the overall market looking like it's going to buckle because Netflix is going to be down a lot and give up, what, a few weeks worth of its gains. So I don't necessarily think
it's only been a few weeks that it's been up 12%.
I mean, the thing's doubled this year, right? So, so I do think
that puts it in perspective.
The largest portion of the overall market cap gains have come from extremely large stocks that are up a lot. But that's just saying that's how the math has to work. It's not as if only a few stocks are up and the rest are down.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.